Can you gift life insurance without paying taxes? Imagine giving someone a gift that keeps on giving, but you're wondering if Uncle Sam will take a cut. When it comes to life insurance, the answer depends on how you handle the transfer. Life insurance benefits paid after the insured's death are usually income tax-free for the recipient. But transferring ownership of a policy while alive can be a different story. If you give someone a life insurance policy as a gift, the IRS considers this a taxable event if the value exceeds certain limits. The key is understanding the gift tax rules. You can give up to $19,000 per person each year without needing to file a gift tax return. If your gift is less than that, you're in the clear. But if you give more, you must report it, though you might not owe any tax unless you've already used up your lifetime exemption, which is over $12 million. When you transfer a policy with cash value, the IRS looks at the fair market value of the policy as the gift amount. For policies with little or no cash value, the gift is minimal. But if the cash value is high, it could trigger the need to file a gift tax return. If the policy owner keeps control and just names a beneficiary, there's generally no gift until the insured passes away. At that point, the death benefit is usually income tax-free for the recipient. However, if someone owns the policy on another person and the insured dies, the IRS might see the death benefit as a gift from the owner to the beneficiary, especially if it exceeds the annual exclusion. To avoid these issues, many choose to have the insured own the policy and pay premiums directly. Alternatively, placing the policy in an irrevocable life insurance trust can help pass the benefit outside the taxable estate. Gifting a policy to a charity is a different ballgame. If the charity owns and is the beneficiary, the premiums you pay might be deductible, and the policy's value can also be deductible as a charitable contribution. Remember, gifts to spouses who are U.S. citizens are generally unlimited and not taxed, but gifts to non-citizen spouses have higher limits. If you do not file the required gift tax return when needed, you could face penalties. The responsibility for paying any gift tax falls on the giver, not the recipient. So, in simple terms, you can gift a life insurance policy without paying taxes if the value stays within the annual exclusion. For larger gifts, you need to report them, but you probably won't owe tax unless your total lifetime gifts exceed the exemption amount. Proper planning, like having the insured on the policy or using a trust, can help avoid unexpected taxes. Always talk to a tax professional to make sure you're following current laws and making the best choices for your situation.